So in this video, I want to talk about trading one stock, and that's becoming more profitable and being more consistent as a trader. So a lot of times why a lot of traders seem to fail in the beginning stages before they kind of put all the pieces to the puzzle together is because you're constantly chasing this stock and that stock. And you're always looking for the next best thing. You're always looking for the next breakout stock. You're always looking for the next short squeeze. You're looking for the next Tesla or Amazon that's up 20, 30 points in a day. And you start to spread yourself too thin. You start to chase too many plays at once. And you end up chasing everything and missing everything. So, what that really means is, in the beginning, depending on the size of your trading account, whether you're starting with $1,000 or you're starting with, $10,000 or $100,000, it doesn't really matter. In the beginning, you need to focus on 1 to 3 stocks. And why I say 1 to 3 is because you don't really want to overload yourself with having to do a bunch of technical breakdowns every single night on 5, 10, 15, 20 different stocks. You don't want to pull up your scanner as soon as the bell opens and look for what's gapping up or what's gapping down or what is the biggest mover on the day or what's setting all-time highs. None of that stuff matters, okay? And I'm not speaking about smaller stocks that are running up 200-300% on a day. That's not really my thing. I'm talking about stocks you can trade a day in and day out and really make a consistent living on. And when you really break that down and think about it, if I was to just take this stock in front of me that's on the chart and on the screen now, Apple, I've traded Apple hundreds of times, if not thousands of times. And I personally know people that trade Apple on a weekly basis, even a daily basis. And, they know the way that Apple moves. They know, generally where it likes to find support, generally where the breakouts are, generally where, things like to bounce. And when you get yourself so familiar with the stock and it's on your watch list every single day, day in and day out, you can kind of sort of pick up on these patterns and pick up on these breakouts and all-time highs. And, maybe it's been running, like if we just take Apple, for example, going all the way back here to June 14th, when we really broke out above this 50-day moving average. If you're an Apple trader, that the macro trade starts confirming or breaking down below the 50-day moving average. And when this broke above and reclaimed the 50-day moving average, not only did it break out, but it went on realistically, about a month run here. So you could have been in and out of Apple literally every other day and made money on this stock for 1 month. And depending on your position sizing, whether you're playing equities or you're playing options, you could have really made your quarter just playing Apple. But if you're chasing everything else, you're chasing PayPal and you're chasing Facebook and Qualcomm and Nvidia and Amazon and this meme stock and GameStop and, Dogecoin, this and whatever else that you're chasing, you missed out on a fantastic move. The breakout came at $128 and it ran all the way up to $150, in just about a month's time. So that's about 20 to 25 point move in a month. And when you sort of get the understanding of that, if you just focus on one stock and learn that when Apple broke out here above the 50-day moving average, where did it come down and backtest support? Well, it came down the first time and backtested support here at the 5-day moving average. And you could have played this on a bounce here off the 5-day moving average. The next day bounced up again, sold here, made more money, waited for this backtest into rising support, which was again the 5-day moving average, and said, maybe history repeats itself by the dip off of the 5-day moving average, which was here. And after it broke through the 5-day moving average, touched the 10-day, immediately reclaimed and closed higher on the day. Again, 5-day moving average. Again, backtesting support, 5-day moving average. Got your bounce here. You could have been in this for a swing trade 1, 2, 3, 4 days, 5 days, 6 days, 7 days, taking profits here. Let's say you didn't come to back test support, taking profits here, played the bounce once again off of the 5-day moving average. And, just to make a long story short here, is Apple really held the 5-day moving average for about a month's time until it broke down with the rest of the market, kind of gapped down below. And at this point was trading below the 10-day moving average. But that any sort of reclaim of this 5-day moving average, which was so strong in the past 30 days, would have been an area of opportunity to potentially get in another swing play and or day trade on this stock. And as soon as we gapped over the 5 and 10-day moving average, made another push higher at all-time highs here, which was that 150 mark, came back down, tested support. And when we broke down again, not to say that you always have to play things to the long side, but if you would have wanted to play this to the short side, going back to history here, when we lost that 5-day moving average, not only did we test the 10-day, but came down here and tried to test the 20-day moving average. So if you're looking to play this, both ways here, this first close under the 5 and 10-day moving average, well, you can sort of tell yourself that the last time we broke down below these two moving averages, we came down here and, tried to test this 20-day moving average. And if we just follow the chart here, we get this first close under the 5 and 10-day moving average here, tries to make a push higher, immediately is rejected at the 5, comes down, not only tests the 20-day moving average, breaks through. So this presented an opportunity for a quick scalp and or day trade on Apple. And we know, just based on the patterns and based on being so familiar with this stock, that once we reclaimed the 5 and the 10-day moving average, this is another area of opportunity to potentially get into a trade here. As long as we don't break down below this 20-day moving average, we know that we are in good hands with Apple here, just based off of previous history of the stock. The minute we do close below the 20-day moving average is a time where you would want to get out and wait for a confirmation to reclaim some of those MAs and get into your trade. Again, Apple, phenomenal job today, closed at $149.71. I think it goes higher, 150, 151, just to sort of test these all-time highs here. But the moral of the story and the point of this video is, if you're having trouble or you're just starting out, really focus on 1 to 3 stocks. My personal opinion, the SPY, the Triple Q, Apple, Facebook. Pick 1 to 3 of those stocks. Obviously, the SPY and the Triple Qs are going to be the indexes. Apple is a low-cost stock that gives, not such aggressive moves, so you can kind of manage an Apple trade a little bit easier than you could manage, let's say, a Tesla trade that, for example, moved 26 points in a day. It's a little bit more easier to manage, and when you can kind of master trading one stock day in and day out, Apple's going to give you 50 cents to a dollar, 50 cents to $1.50 a day. So a lot of area of opportunity, even if you're playing with 100 share lots and you get a 50 to 75 cent move, if you can sort of pick up on Apple's characteristics and traits, you can really get in and get out and make a decent living off of trading just one stock. And obviously, when opportunity presents itself, like going back to the month of June when it reclaims a big level and it's on just a linear line straight up, you can really start to increase those profits. But in the beginning, definitely focus on one stock like Apple, stock like Facebook, indexes like the SPYs, the Triple Qs. They're going to give you an average true daily range, 1 point, 2 points, 3 points. When they have a very, very aggressive day, a stock like Facebook can give you 5, 6, 7, 8 points. Even the Triple Qs can give you 3, 4 points. So if you really start to focus and just trade 1 to 3 stocks, just because you trade a breakout today does not mean that the stock is no longer tradable again until there's another breakout. The stock always is going to come back in. It's always going to backtest support. Okay. You can buy the stock off of areas of support, you can bounce them, you can play them short. But if you start to get familiar with the way that the stock moves, you're going to be more and more consistent as a trader than constantly looking for stocks that are up $10 on the day, $5 on the day. Maybe I should leave Apple alone. It's only moved 50 cents today. Let me go trade Nvidia. It's up $11 on the day. You buy the top of Nvidia, they pull the rug and you're immediately down 5 to 6 points. Okay. You have to know the stock that you're trading. You have to be comfortable with the stock that you're trading. Pick a stock that you can handle, pick a stock that you can control, pick a stock that you're okay with the comfort level of the average true daily range. So for example, I don't want you to go out and pick a stock like Amazon or Tesla that's going to move 10 to 15 points in a day. You jump into a trade, get nervous, see this retrace 5 points, cut a loss there, and then immediately bulls step in, buy the dip, and now it's up 10, 15 points over where you sold the stock. So once you start to get familiar with 1 to 3 stocks, and you can trade 1 to 3 stocks every single day consistently, I would start to open up and expand, the Rolodex, you can say, of the stocks that you play. Because Apple, you can trade daily. The SPYs, you can trade daily. The triple Qs, you can trade daily. A stock like Facebook, you can trade to the long side and to the short side daily. As long as you understand and you have a strategy, you use proper risk management, you can sit back and literally 5 days a week trade a couple of stocks. There's no need to go outside of your comfort zone. I have a personal friend who personally trades Tesla, and they trade the triple Qs every single day, regardless if Amazon is moving 100 points over 2 sessions. They stick to Tesla and the triple Qs. That's exactly what they're comfortable with. They are familiar with the moves. They are okay with the risk. They understand that the way the stock moves, and they stick to what works. I hope this video helps you guys, and I will try to make a lot more like this.